Disney and Beyond Meat are two companies that reported strong earnings and revenue growth in the third quarter of 2021, beating analysts' expectations and boosting their stock prices. Disney, the entertainment giant, posted a net income of $923 million, or 50 cents per share, compared to a net loss of $4.7 billion, or $2.61 per share, in the same period last year. Excluding certain items, Disney earned 80 cents per share, surpassing the consensus estimate of 55 cents per share. The company's revenue rose 45% to $17 billion, also beating the forecast of $16.8 billion. Disney's performance was driven by the recovery of its parks, experiences and product segment, which swung to an operating profit of $356 million from a loss of $1.9 billion a year ago. The segment's revenue increased 340% to $4.3 billion, as more of its theme parks reopened with limited capacity and safety measures amid the pandemic. Disney also benefited from the growth of its direct-to-consumer business, which includes its streaming services like Disney+, ESPN+, and Hulu. The segment's revenue rose 57% to $4.3 billion, and its operating loss narrowed to $293 million from $624 million. The company ended the quarter with nearly 174 million paid subscribers across its streaming platforms. Beyond Meat, the plant-based meat maker, reported a net loss of $19.7 million, or 31 cents per share, compared to a net loss of $19.3 million, or 31 cents per share, in the same quarter last year. However, the company's adjusted loss per share was 11 cents, which was better than the expected loss of 24 cents per share. Beyond Meat's revenue grew 11% to $106.4 million, exceeding the projection of $99.7 million. Beyond Meat's revenue growth was driven by a 46% increase in its international sales, which reached $32.4 million. The company saw strong demand for its products in Europe and Asia-Pacific regions, especially China. Beyond Meat also experienced a 13% growth in its retail sales, which reached $62.5 million. However, the company's food service sales declined 11% to $11.5 million, as some of its customers faced challenges from the COVID-19 Delta variant and labor shortages. Both Disney and Beyond Meat have raised their outlook for the full year 2021 based on their third quarter results. Disney expects its direct-to-consumer segment to achieve profitability in fiscal 2023 and its parks segment to return to historical levels of operating income in fiscal 2024. Beyond Meat expects its net revenue to be between $445 million and $455 million for the year, representing a growth rate of 18% to 21% compared to 2020. In this section, we will look at how Robinhood and Sonos disappointed investors with their quarterly results, showing lower revenue and user growth than expected and facing increased competition and regulatory challenges. Robinhood, the online brokerage that became popular among young investors during the pandemic, reported its first quarter 2023 results on May 10. The company missed analysts' expectations on both revenue and earnings, as it saw a decline in transaction-based revenue and interest income. Robinhood's revenue decreased 5% year-over-year to $207 million, while its net loss widened to $1.4 billion, compared to a net income of $7.4 million a year ago. The company attributed the loss to a $1.5 billion debt financing it took in February to meet clearinghouse deposit requirements amid the GameStop trading frenzy. Robinhood also reported a drop in monthly active users, from 15.9 million in the first quarter of 2022 to 11.8 million in the first quarter of 2023. The company said that the decline was due to seasonality and lower trading activity across the industry. However, some analysts believe that Robinhood is losing market share to its rivals, such as Fidelity, Charles Schwab, and E-Trade, who offer more diversified products and services. Moreover, Robinhood is facing regulatory headwinds, as it faces lawsuits, investigations, and fines from various authorities over its trading practices, disclosures, and outages. Sonos, the maker of smart speakers and sound systems, also reported disappointing results for its second quarter of fiscal 2023 on May 10. The company's revenue fell 23.9% year-over-year to $304.2 million, missing analysts' estimates of $323.8 million. The company's net loss also widened to $30.7 million, compared to a net income of $8.6 million a year ago. The company blamed the weak performance on softening consumer demand and supply chain constraints that affected its product availability and delivery times. Sonos also lowered its guidance for the second half of fiscal 2023, citing uncertainty and volatility in the market due to the ongoing pandemic and chip shortage. The company expects revenue to be between $1.35 billion and $1.4 billion for the full year, down from its previous forecast of $1.44 billion to $1.5 billion. The company also expects adjusted EBITDA to be between $175 million and $200 million, down from its previous range of $225 million to $250 million. Sonos faces increased competition from tech giants like Amazon, Google, and Apple, who offer cheaper and more integrated smart speakers and devices. Disney, Beyond Meat, Robinhood and Sonos are four companies that represent different trends and sectors in the stock market, and their performance after hours on May 10, 2023 can offer some insights for investors and consumers. Disney is a media and entertainment giant that has been expanding its streaming business with Disney+, which competes with Netflix, Amazon Prime Video and other platforms. Disney reported mixed results for its fiscal second quarter, with earnings in line with estimates and revenue slightly above expectations. However, the company also revealed that it lost 4 million Disney Plus subscribers, which sent its shares down 4.7% after hours. This suggests that Disney is facing challenges in retaining and attracting customers in the crowded streaming market, and that it may need to invest more in content and marketing to boost its growth. Beyond Meat is a leader in the alternative meat industry, which offers plant-based products that mimic the taste and texture of animal meat. Beyond Meat reported better-than-expected results for its first quarter, with a smaller loss than anticipated and higher revenue than forecasted. The company also raised its full-year revenue guidance, indicating confidence in its outlook. Beyond Meat's shares rose 8.5% after hours, reflecting its strong performance and growth potential. This implies that Beyond Meat is benefiting from the increasing demand for plant-based foods among health-conscious and environmentally aware consumers, and that it has a competitive edge over its rivals in the industry. Robinhood is a retail brokerage that offers commission-free trading of stocks, options, cryptocurrencies, and other assets. Robinhood reported higher revenue than expected for its first quarter, driven by increased transaction revenues for equities and options. The company also said that its monthly active users rose slightly to 11.8 million. Robinhood's shares rose 4% after hours, showing that the company is recovering from the backlash it faced earlier this year when it restricted trading of some volatile stocks amid a surge in demand from retail investors. This indicates that Robinhood is still popular among young and novice traders who value its easy-to-use platform and low-cost services. Sonos is a home sound system company that offers wireless speakers, soundbars, subwoofers, and other audio products. Sonos reported a wider loss than expected for its first quarter, as well as lower revenue than predicted. The company also lowered its guidance for the second half of the fiscal year, citing softening consumer demand and channel partner inventory tightening. Sonos shares fell 18% after hours, reflecting its disappointing results and outlook. This suggests that Sonos is facing headwinds from the global chip shortage, which has disrupted its supply chain and production capacity, as well as from the increased competition from other smart speaker makers like Amazon and Google. These four companies illustrate how different trends and sectors in the stock market can have divergent outcomes after hours, depending on their performance, expectations, and external factors. Investors and consumers can learn from these examples to make informed decisions about their portfolios and purchases.